Welcome back in, ladies and gentlemen. I just created a discounted cash flow calculator so we can do a little bit of cash flow analysis on companies like Tesla, or if you guys have any other companies that are actually free cash flowing where we could measure the future free cash flow of that company. Drop a comment down below and maybe we will analyze that company. Before we get into the discounted cash flow calculator that I just created and how accurate it is, let's just talk about exactly what is going on with Tesla from a technical standpoint, right? We want to make sure the technicals and fundamentals line up together. For right now, guys, as we can see here, it is definitely trading in a downward channel here, and I basically call the top over here. Just let you guys know, hey, watch out, this thing could absolutely come down. And what has it done? It actually did come down and hit this line of support here, and from peak to trough, that was roughly a 29.4% move down. Now it did bounce back up a little bit, and it's down roughly 26% from when I called the top over here. Now I want you guys to understand that I really do like the company as a whole, and I want to own it for the right price. And so I want to get into roughly where I think the stock could go. I do think it should find some support here right around 794. The MACD curling over, heading downwards. Okay, we can clearly see that's heading in a downward direction as well. So just from a clear charting perspective, guys, in my opinion, it's trying to build a base here, so I'm not saying sell the stock at all. Okay, it looks like it's definitely fighting pretty hard here. The last few days it's building some support here, and so who knows, but it is putting lower lows in. So I would just caution you on this one. Be very, very careful. This one could rip down $100, $200 pretty quick. Okay, so from everything that I see from the chart, though, if I were just to take it from more of a outer perspective here, to me, guys, it looks like it's putting in. To me, guys, it looks like it's putting in a lower high, a lower low, a lower high, a lower low, lower low, lower high, and it found some support here. So maybe it heads back up and we actually start getting and breaking out of here. So that could absolutely be the case as well. Interesting chart at this time. It looks like it's trying to make a move up here. So keep an eye out on Tesla. Maybe it's gonna have a nice bounce back up to recent resistance here. But as I stated on the daily chart does look a little bit more bearish than the 4-hour chart or the 180-day chart. To me, this chart looks a little bit more bearish to me, as it's below major moving averages. Recently hit the 50-day moving average and came back up, and now it's being rejected by the 200-day moving average. So just keep an eye on that. It is above the 50-day moving average, but it's below the 10-day and the 200-day. So it's in an interesting spot. Looks like it's consolidating here and it wants to head up. We will see what happens with Tesla. So I created a discounted cash flow calculator. It would be fun to use for a couple different stocks that have positive free cash flow. So today I want to just use it for Tesla, kind of just see how it works out here. So the first thing I want to take a look at is, what are the growth estimates for the company? So right now, the growth estimates for the company are just right around 39.7% for the next few years, for the next 5 years. So for the next 5 years, Tesla's projected to grow 39.7%. So I'm going to go in the discounted cash flow, and I'm going to just put 40% even on this long-term free cash flow. This means in perpetuity. This means when Elon Musk is gone until the end of time, what kind of return can you get on your capital? For right now, guys, I'm going to use just a 3% rate of return. We got 2021 free cash flow, and then I just used the 40% to grow over until 2026, where their free cash flow should be approaching $18.7 billion, roughly $19 billion. And how we get that is we just go to Yahoo Finance. Looks like for the trailing 12 months, they're already outpacing what is to be expected for 2022 free cash flow. So, you never know, they can incur expenses along the way and things of that nature. So we're going to just use this model to stay consistent with what the analysts have been saying about the stock. So we got that in place. Along with that, we got to figure out outstanding shares. We have 1 billion 1,040,000,000 shares outstanding, and seeing that there is shares outstanding is 1.04 billion. So we lock that in as well. I have cash and securities put in there. I have their total debt put in there. So the only thing we need to figure out now is the discounted rate, which we can go here and Google it really quick. And when I Google it, it jumps. The average WACC looks to be about 6.3 or between 5 to 7.5. So I'm going to use 6.3 as the WACC. So if we get a perpetuity growth rate of 3% and we have a discounted rate of 6.3% and a 5-year growth rate of roughly 40%, this is going to put the stock price at a price target of $463 of intrinsic value per share, that is, which would give me a sell rating on the stock, and it would give me a negative 46.7% rate of return. Now, that's me stating that, I think in perpetuity, the stock's going to give me 3%. Now, you can obviously move these numbers around to where you feel is appropriate. Most people probably think that I'm undershooting it. So maybe like 5% would be more appropriate. And if you put 5% in there, obviously, you can see here that the stock's intrinsic value jumps up to $1,100 a share, roughly gives you a 28.8% rate of return, and it gives it a buy at that point in time. Obviously, you can push up a little bit higher to 6% or $4,700 per share or intrinsic value for the company, and that rate of return is a 444% rate of return with a buy signal once again. So if we go back down and we do a 2%, it would be a sell signal here, and obviously the rate of return would be negative 58%. So it's really important to understand that 1 or 2 quarters that go in the wrong direction for this growth rate could absolutely change things pretty drastically for the stock. If we even just go in here and put a 5% rate of return and get an intrinsic value of 1,100, but we say that the growth rate slows down to 30%. Once again, it's a negative rate of return here at negative 10%. You're looking at a $780 stock. So it's really important that it maintains a 40+ percent rate of return, and obviously for the long-term free cash flow growth, you want to see it probably above 4 to 5%. Well, you want to see it above about 3.5% for the long-term free cash flow growth of the company, or the perpetuity free cash flow for the company. You want to see it in the 3% range or above. So for me, guys, I just don't know if there's enough meat on the bone for me to be interested at this point. I think if it got to, if we put the growth rate back at maybe 38% for over the next 5 years, 40% revenue growth. Along with that, we can add 4% growth rate, which gives it right around a $600 stock. And I think that's kind of where I would be interested personally to possibly take on some risk, is probably around that $500 to $600 mark for Tesla, me personally, guys, which means it basically needs to come down about 25-26% for me possibly to get interested in the stock. Because I do believe that, there could be some years where the growth rate actually exceeds 40%. So at that point in time, it would basically even itself out, in my opinion. So this was just a quick dive into, I made this calculator. Just want to share it with you guys, see what you thought of it. If you want me to look at some other stocks that are free cash flowing and kind of just see what the intrinsic value is of those companies and what kind of rate of return you can expect if you do buy those, do enter those positions. So as always, guys, really appreciate your time. Hopefully you enjoyed my dive in as I spent some time putting this calculator together. Thought you guys might enjoy it. And as always, really appreciate your time, and we will see you next time, investors. Peace.